we could start with roll call, please.
Okay, roll call. Ms. Goodman.
Present.
Mr. Wilverding.
Here.
Mr. Wolkamp.
Here.
Supervisor Canepa. Ms. Herman.
Here.
Ms. Babb.
Here.
Mr. Keokum.
Present.
Mr. Hopkins.
Present.
Thank you.
All right. Next item is the approval of the minutes from the quarterly meeting of April 27th. And before we look for a motion or any comments on that, I would just like to note that the pages 2, 3, and 4 of the minutes had the incorrect date in the header. So we need to update that to the April 27, 2023 date.
This is Fonse with those corrections. I make a motion to approve the minutes.
This is Jay, I'll second.
Okay, all in favor?
Aye.
Opposed? Motion carries, unanimous. Next, we have public comment. Ms. Strange, any public comment?
No public comment at this time.
All right, then we'll move forward with our program status reports for the second quarter of 2023, and Mr. Segal.
Thank you very much, and good morning to everybody. Hope everyone's doing well, having a great summer. So we have a couple of items on our agenda today. The first, we will be discussing the quarterly report, which is your colorful printout, and thank you again for printing these for us today. We appreciate that very much. And then after that, we have just a quick discussion on the Schwab program, just an update. And then also on our agenda, we have a brief discussion on potentially adding fixed income and CDs into the self-directed brokerage account. So we'll start again with the plan report for the quarter. And on the second page, if you just flip it open on the top, this is just the plan snapshot for the end of the quarter. So as of June 30th, the middle of the page will have your 457 plan. Next to that, you'll have the 401A plan and then the totals of each plan. And the top row is the beginning balance at the end of the first quarter, March 31st, and then we add on contributions. And so we added about $6.5 million in the deferred comp plan, about $500,000 in the 401A. Then we subtract off distributions for both plans and fees, and then some loan activity. And then we add in some, other activities, typically loan payments and roll-ins, and then gain and loss. You can see for the quarter, we had a pretty substantial market gain of $19 million in the first quarter in the 457, and an additional $1.4 million of market gain in the 401A plan, for a total of almost $21 million in market growth for that 3-month period. The plan started the quarter at $503 million, finished the quarter at $524 million. So really nice growth again in the first quarter. So we're pleased to see that. The next few pages are specifically the 457 plan, starting on page 4, and we have another balance sheet for the 457, so I won't really go into that. But on page 5, we have some other plan statistics that we always find interesting. And we'll start on the upper left again. We have just your 457 only plan balance. And if you just move across to the right, we have $3 million in outstanding loans in your plan. We have about $505,000 in self-directed brokerage account dollars. And then moving down from there, we have, that's a nice 6666 number. Those are the participants that are in the 457 plan that Nationwide Record keeps. Yeah, I'm glad there's 4 6s, not 3. Then for average account balance in the plan, just a tad under $75,000 for the average. So we're pleased to see that when the market growth happens like it did in the quarter, your average plan balance will also increase. And then a stat that we're very proud of is new enrollments on the far right. We had 154 in the second quarter. We had 168 in the quarter prior to that. So we're off to a great start in the year, and Brenda does a phenomenal job getting as many people as she can sign up in your plan, and will continue as best she can. So a slight decrease, but still a really, really good number, really healthy number. We talked a bit about contributions, so $6.6 million in new cash flow for the quarter coming into your plan. We had some loan repayments coming back to the plan, about $263,000. So this is the accumulation of 3 months worth of those loan repayments back in. And then we had some rollovers and transfers into the plan from outside. So when Brenda meets with your new hires and your employees, she typically asks if they have accounts somewhere else. They're much better off transferring them in. So you can roll over your other 457 plans or other DC plans in here and consolidate. And she always talks about that message to your employees. And so we did get some roll-ins. And then Money out, we're subject to money out like any plan. We lost $6.8 million in distributions. We have more on that. And then we paid out almost $400,000 in new loans. And then we had some rollovers and transfers out. So those are specifically people that have left the county and moved their money to another provider or another company. So we have lots of corresponding data on the next few pages. I think maybe jump into 7 with some optional strategies. On the upper left there, we have Roth, and your plan has just under $5 million in Roth dollars, which is really, really great. That's up from, again, the quarter prior. We have 738 participants that are in Roth that have chosen to contribute money after tax. The main difference is that Roth is after tax and tax-free versus pre-tax, and at some point you'll have to take money out of the plan, and then that is going to be taxable. So big difference between the two. Your plan allows both to satisfy those needs, and so Roth is getting very popular. And then we talked about self-directed brokerage. We're going to have a conversation on that. But right now there's nine of your participants are enrolled in Schwab, a little over $500,000 in assets there that they have transferred from the core funds into the Schwab accounts. And then once the money's in Schwab, then they can they can sort of trade at will, buy stocks, bonds, mutual funds, whatever they want to trade in. And then we have other statistics that break out Roth usage by age, and also with prior quarter numbers too. And so the next page on 8, this is just a snapshot of your money in. Page 9 is a snapshot of money out, and so we'll take just a second to talk about each. So again, contributions, 6.6 coming in. Most of that was through payroll. So salary contributions, 5.1 million. That rollover money we talked about, $629,000. And then we have 3,541 of your employees are currently contributing, or at least in the second quarter. So that's a pretty good number. And you can see how much that went into Roth. And then on the upper right, we split it out with your salary contributions versus rollovers and transfers. And then your employer contributions had a little bit of employer money, and then self-directed, a little bit there too. And so that sort of makes up contributions, money in, and then the next page is money out on distributions. And so for the quarter, you can see that the top number, 6.8, rollover out 2.7. On the very bottom of the page, we have the top 5 external payees receiving money. So when someone leaves service with the county and rolls their money over, Nationwide tracks it. As long as they put the name of the company on that form or online, then we're gonna track the top 5. We have more than 5, but our report doesn't have enough room to put more than 5, so we typically use top 5. So we had 3 going to LPL, 2 people rolled to Merrill, 1 to Vanguard, 1 to Mass Mutual, and then 3 to Fidelity. So 10 makes up 1.6. So it's not quite the full rollover out number, but it's the majority of the assets are on the bottom of the page. And then on the top, we have prior quarter, current quarter, and then the change between the two. So current quarter, kind of in the middle of the page, you can see the numbers, whether it's a rollover transfer, someone retired. So these people are just taking money, but they categorize their distribution as retirement. And then we had some death claims. We had some in-service money coming out. And then we had a quadro, which is a divorce decree when the account split to their spouse. And then we had a hardship, or maybe a couple hardships. And then, so that kind of makes up your distributions and also your contributions. So any questions there? Pretty straightforward. Then, I'm not going to talk too much about the assets, but we also list all of the money where it's currently sitting. And not only that, but we list it out by every fund, and so does Highest Group. So you'll have this twice. So I'm not going to spend much time talking about the various funds themselves. But if you look at the upper left on page 10, it talks about where the asset allocation is currently sitting in your plan. And so 19% of your money is target dates. And then you can go down the list. The other big number that stands out is fixed assets or cash. Right around a third of your plan is sitting in fixed assets or cash, which means that there's no risk. There's no market fluctuation. They're going to be safe there if they choose that investment option. And then almost a third of your money is in large cap mutual funds, and the rest is spread out between the other various asset classes in your plan. So it looks like most Nationwide plans that we record keep. And then just wrapping up our last 2 pages, loans, not much to say with respect to loans, except for on the upper left, we have 255 active loans in the books. Those folks are repaying back to Nationwide. For the quarter, we issued 30 new loans, last quarter 35, so we were down slightly from the quarter prior, but averaging somewhere between 30 and 40 new loans a quarter. And then we closed 10, so 10 of them made their last loan payment and closed it off, and they're now eligible to borrow again if they wanted to. But we will always track new loans, closed loans, and active loans for you, so you have an idea of loan activity in your 457 plan. And then on 14, we now track, I've mentioned this, I think, last quarter, but we now track enablement and engagement, and most of this is based on e-services. So we have e-delivery, for example. 60% of your participants are now receiving all of their Nationwide communications electronically. So they've opted in to store statements. You can go back and look and you can pull statements, so you can always get those. Online enrollment, so we had 71 transactions, just about right around a quarter of the enrollments that we had in the second quarter were done online. So we like to get that number as high as we can, but also a lot met with Brenda. We had online distributions. We had 187 online distributions in the quarter, which was 65% of our total. So your participants like online services, and they like to go to the Nationwide site. And when they take a distribution, more than half are now taking it online. Very simple. You can also type in your bank account and your routing number, and that can be sent directly through or to your bank accounts, and it's much faster. And then 51% of your employees have an online account with Nationwide, and this number has gone up considerably from when we first started record keeping your plan, but more than half now have an online account. That helps with our marketing efforts too, especially with email addresses, but a lot of our communication is done online. And then on the upper right, one of the most important statistics is beneficiaries on file. So 86% of the participants in the plan have a beneficiary listed with Nationwide. Sometimes the backup is if we don't have it, hopefully the county might, or vice versa. And so we like to get that number as high as we can. This is pretty high for Nationwide, kind of in general. So we don't have any plans with 100%, unfortunately, but 86% is moving in the right direction. And so anything we can do to help with getting more beneficiaries typed into our Nationwide system and record kept by us, the better. And then My Interactive Retirement Planner, this is our software which gives you a retirement readiness score, and it's defaulted to just your 457 and your 401A plan balance, but we recommend that your employees go out and input more data, your pension, outside assets, and then it gives you a retirement readiness score and lets you know if you're on track. And all those numbers can be amended, and the default's 85% of your replacement income, but that can be changed. We have inflation assumptions, we have rates of return assumptions. Those can also be modified to give you a retirement readiness score, and that can be printed out and saved, and that can be updated anytime.
Hey, John, I have a question on that retirement, and that's a great feature. I use that myself quite a bit. What I did notice is about, and I don't know exactly the date, probably 3 or 4 months ago, did you all change how that was calculating things? Because it had me in a really big deficit, and then one day I looked and all of a sudden it had it as a surplus, and I didn't do anything different. And I never knew how it calculated what it was calculating before and why there was a big deficit. And did you change something in how that was calculating? Because something dramatically changed in mine without me doing anything.
I believe it was due to the investments, right?
Yeah, we made a couple of assumption changes with the investments and also the rate of inflation, which made everyone's account projection improve. And we used to assume kind of a static rate of return, but now we are looking at your actual investment options and using a rate of return based on what you have versus just an assumption for everybody, which can also again be modified though. If you wanted it, if you think it's too high, you can change it. Too low, you can change it. But we did make a couple of tweaks to the system, so your retirement readiness score would have improved.
Yeah, mine did. I just was like, whoa, I didn't do anything.
It's your investment style that it's picking up on.
Yeah.
Okay,
You
thanks.
retire sooner now.
Yeah, we'll see.
All right. Any questions about the Nationwide stats? And I went through it a little bit brief, but wanted to pause and see if there's any questions or comments.
Just a comment, the website is awesome. I think the technology there is great, so again, keep it up. I think that's it's very user-friendly. Again, it's always fun to make adjustments here and there. You spend hours in there, but I like it. Thank you.
Thank you. We appreciate the comments.
I'd like to make a comment as well. As far as the beneficiaries on file, I strongly recommend you work to 100%.
Yep.
Historically, in this county, for whatever reason that was set in place many, many years ago, beneficiaries for almost everything are kept at the retirement office at SJ Sarah. They are going through a major software build themselves over the next few years, so I expect they'll be wanting to get out of maintaining the beneficiaries for the county business. It's something that was put into place 20-some years ago, but I'm sure they're working towards separation of those kind of things as well. So I think as much as you can do to get 100% beneficiaries for people will make life easier in the long run.
Yeah, and I appreciate that comment, and we are definitely working on it. So the challenge here is prior to 2003, with the old Hartford plan, everything was on microfiche, just like it was here at one point in time. So when Mass Mutual bought that chunk of business and then it was purchased by Empower, a lot of that information was just not in the system. So the first thing I do when I talk to somebody, we do what I call housekeeping. We look at their contact preferences, we look at their beneficiary information, and we make sure it's up to date.
Right.
We also went and did a mailing campaign. So sometimes people are a little bit leery of that, or they think it's junk mail, but we did get some positive
No,
responses.
it looks,
from
that's a
that.
great number.
Yeah.
I just know, like I said, for whatever reason, 20-some years ago, SJ Sarah became the keeper of beneficiaries.
Actually,
And I think it's for the county insurance, some of those things as well. So I just know it's coming down the pike.
that information is available here at the county as well. So I had somebody who passed away and we had no beneficiary information on file. So I got a hold of my friend Lori Roleri, and she keeps everything.
Yes.
So she did have a
Yes.
PDF of the document, and we used that
Right.
to help
And
the beneficiary.
SJ Sarah is a keeper of forever too, but going forward, it's
We're working on it.
new systems. No, you're doing great. Thank
Yeah,
you.
and to piggyback on what Brenda said, we have had many discussions with Tammy about missing beneficiaries. We have run lists, and we have provided data through Excel about who is currently missing one. We did a major reach out to people. I don't remember the number we got back. I can't even give a statistic on it, but we did do a mailer to try to get more. But when she comes back, we'll have another discussion with her to see if maybe we can do another mailer or some other kind of reach out to try to get more, because
You
we
do-
totally
it looks-
understand.
It looks like that, 86 is a great number.
Yeah, I've done
If I could
email
just
campaign, and
add-
so is Tammy. Tammy did
During,
a countywide.
Yeah, during this open enrollment, we actually have been working to also include an update to make sure we have beneficiary information for the life insurance and for the deferred comp. So I think we may see, hopefully in the next quarter, you'll see those numbers improve.
Yeah, that's great.
I guess I'm a little confused. Doesn't retirement have a separate beneficiary?
Yes.
So
Yes, they
people may
do.
not be,
No,
contribute.
all I'm saying is 25 years ago, for various reasons, SJ Sarah became the keeper of beneficiaries. And as people would retire, and if somebody passed away, the county would reach out to SJ Sarah and say, it was like one beneficiary form for everything. That's not the case anymore. Everybody's doing more modernized, getting it set up. But if there's any hanger-ons out there, you just want to try to catch them, that's all.
so if somebody dies, the beneficiary no longer gets the $5,000
No, that's not what I'm saying. Not what
Okay,
I'm saying
okay,
at all.
never mind.
I'm just saying the keeper of the information. And so it is changing. Obviously, you guys are working on getting it up more modernized this too, but I just want to encourage you to keep trying.
Sometimes it's different.
Yeah, that is kind of strange. Again, in my retirement, I would want to go to one person, and these funds, I would like to go to another person. So those two should definitely not be linked at all, so.
Absolutely, and it's been separated officially for also probably many years. It's just there's some old documents out there. People have been around for a long time,
Yep,
so
you're right.
they're working on it.
But we'll continue to do our best for you.
Yeah.
So just wanted to give a real brief self-directed brokerage update. Schwab produces this quarterly report for us and sends us to provide to the committee. It doesn't have everything on here. It's not a full quarterly report, but it does give some basic information such as plan assets, activity, how many participants are in the plan. That's in the upper right. Males versus females. Looks like here it's 100% males. There are 9 of your employees that choose to invest outside of the core funds. And just to give a recap, Schwab is available because sometimes participants come to committees and say, well, gee, I like to invest in, let's make up a name, Fidelity, or let's say American funds, whatever the fund, you know, people have their favorites. And to alleviate those concerns, the self-directed brokerage account was opened, and it's a portal. So what we do is we have the ability to take money from your core funds and move it into a Schwab account, which is still inside the kind of deferred compensation umbrella. And then once that money is transferred into Schwab, that participant can then go in and trade. And the plan restricts what that participant can buy and sell based on a master agreement that the county has set up with Schwab. So the county controls the investment types that your employees can choose from. For example, your plan allows pretty much all mutual funds. It does not allow any equity purchase, so no stocks. It does not allow any fixed income or CD investments, no foreign securities, and no ETFs, and no options trading. So it does have restrictions. So the plan itself is able to be modified, and that's based on committee discretion. And one of the items that we talked about last quarter was the ability for your employees to purchase fixed income and or CDs inside the self-directed account. So that would be for those 9 people that currently have it, or anyone else that wants to roll money and open up an application and then to go out and get it. And so we wanted to have a discussion to see if there was any interest in modifying the investment options that the committee allows your employees to invest in with Schwab. And that was one of the items that we talked about last quarter. And so we just want to see if there's any interest to modify that agreement. And the way it works is that we would then redo the agreement and need a signature from the county, and we would send that back to Schwab. They would update their systems. It takes them a week or two, typically, sort of on a best case scenario, sometimes longer. But then that's updated, and then those participants would then be able to select those investment options inside Schwab. But you'd have to switch it on and make some modifications to your master agreement. So Schwab is totally controlled by the county committee. And again, you make the decisions as to what your employees are able to invest in once they open the account. So that's where we are today, and I believe that it was requested to be added to the agenda, or at least a discussion point. And so just wanted to see if there's any questions or comments and see if there is any appetite to make those modifications. And I know that there's another item talking about money market funds also, but I guess now we'll tackle Schwab and see if there's any interest in that. But
I have a question, John. And, you know, I've been on this committee since I've been for 10 years, and I'm sure I was here when the decision was made. What I don't recall is that we did not make ETFs available for anybody who happened to do that. And, you know, my personal accounts, I invest in ETFs pretty extensively. I find them to be just as effective almost as the mutual fund options, and they're a lot more cost effective. And I don't know what the logic was when we didn't allow that, but I don't know why we wouldn't.
My guess is ETFs didn't exist when that decision was made, because this goes way back to Hartford.
Oh, okay.
Yeah.
I would propose that we allow ETFs to be added. I mean, they're effectively mutual funds with less costs and you know, less direction. They just mirror other, what do you want to call it, markets, if you will, depending on what you want to go after. And they're not, I wouldn't say that they're any more risky than anything that we might have out there, you know, as a directed mutual fund plan.
And maybe women will invest if they use.
Well, and I talked to a lot of your retirees, excuse me, and part of where they're going is to financial institutions that offer CDs right now. So all these rollovers that you see, some of them are going because they want individual stock or they have a financial advisor that's pulling them in that direction. But I'm talking to a lot of retirees and they're looking for more stable, higher returns, and they feel like they have to go outside the plan to get that right now. So if we can offer that, that really supports the retention that the county cares about. So
Well, if you look at like the IVV, for example, that's the core S&P 500. That is the S&P 500. I mean, you're having the ability to invest in the S&P 500 effectively through an ETF, and as one example.
So that, I'm glad you brought up ETFs, because I agree, they're kind of like a mutual fund as well, but the stable value, people are asking for the CD option,
Yeah.
for sure.
Even the ability to invest in treasuries would be kind of nice, right?
Yeah, stable value stuff. To me, so what I've heard back in talking to committee members is they want to limit the risk, and they feel like the risk is in individual stock. I don't know that anybody is going to feel like there's a lot of risk in bonds or CDs.
Well, you might want to limit the duration. If somebody goes out, 10, 20, or 30 years on a treasury bill or bond, they could get hurt, if rates skyrocketed to 10 or 12%, right? But if you limited it to 24 months duration, you just hold it to maturity.
I've always been kind of conflicted in this issue. Again, I kind of understand that we set it up to protect the employee, but at the same time, we think it's the employee's money. And you can kind of put it at a great point. I mean, for me, I have my 457 plan, and again, it's no risk because it's all in mutual funds. I have my own private account that's in stocks, and then I have my Roth that's in speculative stuff. So again, so you have all these three accounts, and when I do leave, if I do leave, I probably won't want more control over my funds, and I will go towards something that will allow me to pick individual stocks. So again, I'm kind of torn on it, and we're going to be discussing that a little bit later. Again, I think the fixed income stuff isn't really that important, but if someone wants to move into different stocks, you're kind of torn on, hey, this is their money. At the same time, hey, we're here to protect them at the same time. So again, it's very difficult, so.
So let me ask you this, Fonse, you have your Roth and speculative stuff, that's in case it takes off and does a 20-bagger, you don't have to pay taxes on it, right?
Exactly. So
Good job.
each one of them have its own purpose, and again,
And we have that with the Schwab, so it goes in as two different lines. It's $50 for each one to open that family door with them. So one is pre-tax and one is Roth. So, I mean, if people are doing both over there, it's $100 annual fee, but if most people are doing pre-tax stuff over there.
Yeah, so just to kind of summarize, modifying the Schwab master agreement is fairly simple. We just wanted to know, because it was on the agenda, if there was an appetite in adding fixed income CDs. We really check a box, get a signature, and send it back to Schwab to update it. However, we just need to know exactly kind of your thoughts, and we just want to have an open-ended conversation about that specifically.
I'd be okay with it.
Do we have to have a
Additional
motion
option.
for it, or?
I like the idea of, because currently CDs are paying more than, and people might not want to move at all because they're nervous about it, but it's also kind of silly when there's a fairly significant difference and we have to move it out. So that's kind of, if we're
And-
going to open it up, one
Yeah,
of the safer
and
things you can open it up to are the CDs.
True. Yeah, I guess, there's no downside, but we wouldn't have any marketing towards this, but it'd be word of mouth if this was modified, because I'm sure Brenda has a list of people that have asked, but she would most likely reach out to them and say, okay, it's ready to go, you can now. But again, that's how this gets communicated. So we don't have any sort of marketing materials to push this out. It would just be a change in the agreement, and then they would be able to do it. So it's
John, I
underneath
would
that.
propose taking it in incremental steps and maybe adding the CDs and the ETFs and seeing how that goes and, go from there.
Sure.
John, if I may, so we've agendized this as informational only. So to the extent that you're asking the committee to take action or to propose a motion, I'd propose that we agendize it for a future meeting.
There is an action item later that we might be able to use for this.
Correct, there is one later agendized, but not for this particular item.
Oh, you mean just in terms of what we're doing?
It's up to you.
Sure. So just a brief update from me. I know I've been interjecting quite a bit, but I've had the opportunity to come back and do some on-site visits with your employees, and that's been really wonderful. I was here for the Screaming Man, so that was interesting. I can see you have heightened security due to that, so, but that was an interesting visit. I think that was last Friday or the Friday before. But I am doing outreach to visit other departments. I'm going to be headed over to behavioral health next Tuesday. And I reached out to County Hospital to go out and see them. So I'm slowly reaching out to the departments to let them know that I'm available for in-person meetings. And that's being very well received. So pretty excited about that. And then, of course, we had our webinar series in May. And we had 98 people at the county spread across all 3 of those webinars attend. So that's probably, of all the counties that I serve, it's probably the highest attendance. So we'll do another webinar series in September to hopefully continue to engage your employees with the education that we offer. And that's about it.
Cool.
Thank you.
And then just one final bit of good news, and I just had mentioned this to Tammy. So I sit on the NAGDA Awards Committee. This is my 3rd and final year. It's only a 3-year commitment. And highest group in nationwide last year submitted a NAGDA Leadership Recognition Award submission into NAGDA. And those are collected and they're voted on. And I'm happy to say that San Joaquin County won. Wow. Yeah. And so highest nationwide collectively together sent in the submission. And what the submission was for was our financial wellness courtyard that we had last year. And we're going to offer the same thing this year. I've already received your open enrollment dates. We're going to launch it again. But I just want to share a couple of stats. We're really excited about it. NAGDA's going to be reaching out to the county most likely in about a week or so with the good news. And you'll also be honored at the upcoming conference. And we'll get some sort of certificate or plaque. But we're really, really happy. This is the first time that we've made a submission for you. And what we said in there, and it's a 5-page submission, and I can definitely share this and send this out to everybody. But during the 60 days last year when we had our courtyard open, we had 175 new enrollments. We had 9,473 clicks on the courtyard. We had 891 videos watched. We had 465 visits to the website from the courtyard back to your website. 31% of all of your employees visited the courtyard, which is an amazing number. I was actually called twice by marketing, and they asked me, what did the county do to advertise this? And we did a case study, and I had to talk to Tammy, what did you do on which day, and how many times did you send out notifications? And you were one of our top visiting courtyards for last year. You beat state of New York, you beat state of Ohio. I mean, you beat multiple billion-dollar clients. You beat everyone. So we're really impressed, and we wanted to share that with NAGDA. And the impression I got back from my peers who sat on the awards committee was very favorable, and they were really excited to see this. They really liked the submission, and we're just really pleased. And so I wanted to share that with you. We're not going to see you before NAGDA, so we wanted to share this with you. But our vote was 2 days ago, so this is hot off the press. Plans haven't even been notified yet. But since I sort of cheat the system a bit, I'm on the committee. Not that I voted. I didn't vote on this, but I did get inside scoop, so I wanted to share that with you. So thanks for being a great partner.
Yeah.
John, I just want to add a comment to that because I got to tell you, I'm pleasantly surprised but not surprised. And you know, I think we work all very hard on this committee. You heard what Fonse said earlier about how easy it is to navigate. When you folks did your RFP, your presentation and everything, it was very impressive. And generally, that's the best you ever see from an organization is when they do their sales pitch, and then it's all downhill from there. And you guys actually went above and beyond even what your presentation was, in my opinion, to be able to perform even beyond what we were anticipating. I think that coupled with Vincent's guidance over the years and the fund lineups and everything else, and you just have two things that fit so well together. And I think it's recognized out in our employee base. So I just wanted to compliment you both on what you've been able to do. So congratulations.
Thank you. Appreciate it. And I was part of that presentation, so that's good to hear. we keep our promises, so that's all we had today. Thank you. Thanks for the comments.
All right, thank you. Next on the agenda, I'd just like to make a notation of a clerical error. The agenda itself is showing the first quarter 2023 performance. It should read second quarter performance, and the materials that were sent along do show that as a second quarter performance update. So I'll go ahead and turn it over to Vincent.
Great, thank you very much. Yeah, good news continues. Just as a gentle reminder of our role, my name is Vincent Galindo, a consultant with the Highest Group. We work in partnership with Nationwide as your outside vendors, if you will. We do a little bit different. A lot of our data points overlap, so I'll skip some pages so we're not repetitive. But what we do is we work more on the investment side and more the process as a co-fiduciary to the advisory committee as well as the plan administrator. I did mention the good news continues. Somewhat of it's not 100% good news. I don't know if you saw yesterday, the Federal Reserve raised rates yet again as expected. The good news is, even though Jerome Powell, chairman of the Fed, telegraphed that there might be one more hike, the market is presuming that this is going to be it in terms of interest rate hike for the rest of the year. So if you go ahead and take a look at page 4, I'll skip over the text-heavy narrative. Essentially, we have seen an expanding economy with a resilient, not only consumer base, but a very, very healthy job market. Certainly, the chatter around the R-word recession that we heard loudly and often over the last several quarters has been muted. I think the other footnote to Jerome Powell's comments yesterday was the achieving of the soft landing, where they're going to raise rates but glide the economy to cool it down without entering a recession. And he actually came out and said the risk of inflation is gone. So good news there. The other part of the update is on the chart on the upper left of page 4, gross domestic product. Most economists would view GDP as a good barometer of our economic output. A healthy economy grows anywhere from 2 to 3%. They call that the Goldilocks economy, not too hot, not too cold. And I'll just tick down the recent GDP numbers quarter by quarter. Last year, third quarter was 3.2% to the positive. Fourth quarter was 2.6. First quarter came in at 2.0, and this morning, the second quarter advanced number came out at 2.4%. So again, we're expanding, but not overheated, at least by measurement of GDP. The one overheatedness of this economy is the unemployment rate. I talked about the resilient job market. It continues to be very, very impressive, and that's a threat to one of the mandates of the Federal Reserve, and I'll talk about that threat here in a second. So the unemployment rate pre-pandemic was 3.5%. Remember, a measure of full employment is an unemployment rate of 5%, so that 3.5 is really good. The latest read is 3.6. Here in the county, it's a little bit higher at 5.9%, but nationally, a very, very strong labor market. And now I want to move down into that threat. This is the continuous headwind of what the Federal Reserve is trying to fight. It's the CPI, or Consumer Price Index. Translated, that's inflation. Towards the end of last year, inflation hit a 40-year high of 9.1%. Thanks to those measured and aggressive interest rate hikes by the Federal Reserve, we have seen the inflation number come down to a more moderate 3%. But when you strip out food and energy, we call that the core CPI, it's 4.8%. And I've said this before because it has been a drumbeat across the news. The Federal Reserve has a 2% target. So again, hopefully with this last interest rate hike will achieve that soft landing, cool the inflationary number without heading us into a recession. So we'll see. Generally, the market's been positive, but before I go into the bond and stock market, I'll pause, see if anybody has questions or comments. Okay. Moving down to the bond market, it has been a rough patch because bond math simply states as interest rates go up, the value of existing bonds go down. And so we have seen historically over the last couple of years a weak bond market. The nice thing is, as rates have normalized, we did see a nice rally in the bond market. So if you flip ahead to page 5, the chart on the upper left, second line down, the Bloomberg US aggregate. Bond investors call this the AG. This is a good representation of the bond market. Last year it was off 13%. You can see year to date 2.1%. Despite the fact that just for the second 3-month period or the second quarter, negative 0.84%. So we did see some weakness short-term, but year-to-date, very, very solid. And I did peek year-to-date as of this week, it's still 2.1%, so still positive, which is a nice reprieve for these bond markets, bond investors who took it on the chin last year. The one really shiny spot is about 3/4 of the way down. You'll see that Bloomberg US high yield. That's a euphemism for junk bonds. You can see for the quarter up almost 2%, almost 6% year-to-date. Again, I did peek. The year-to-date number as of this week, positive 6.5%. So those more riskier fixed income securities are rallying big time. Flipping ahead briefly to the top right of page 6, this is the US stock market. When people talk about the stock market, it's generally the domestic. The S&P 500 or Standard & Poor 500 is a good representation. You can see for the quarter up almost 9%, which back after the first quarter is still very, very solid. That's 16.9% year-to-date as of this week, positive 20.1%. So phenomenal rally in the US stock market. And I punched out the US because on the next page, there are about 45 countries outside the US with an investable stock market. So Canada, Mexico, Brazil, Poland, Russia, China. 45 countries are represented by the first line on the upper left. It's the All Country World Index, or ACWI, ex-US. You can see for the quarter up 2.5%, bringing the year-to-date number about 10%. As of this week, the ACWI is positive 13% year-to-date. So again, really all up and down the markets, very, very good news. Pause, questions, comments? All right, flip ahead to the next section. This is somewhat of a high-level executive summary. Again, a lot of the data points are similar, so I'll be very brief on this page. Just an intuitive overview. On the middle left, you'll see the plan notes. What we're going to do is just talk about some of the fund governance or vendor management, and vendor management is nationwide. We have a money market search document to go over. The investment policy statement was approved at the last meeting. And then at the bottom, these are the funds that are on watch. The good news is the T. Rowe Price, large cap growth, and large cap growth, it invests in big tech heavy names, is no longer flagging. That's the good news. The verbiage in your investment policy statement, though, says that a fund should be in compliance for 2 consecutive quarters before removing it. Plus, it's just nearly getting by. And so our recommendation is to retain both of those funds on watch status. And we'll talk about that here in a minute. Going into the performance report of the 457 plan on page 10, a lot of our committees like to see how the plan did overall. And you can see bottom left for the quarter on a weighted basis, all the investment options performed about 4.25%. And then for the year, up almost 9% at 8.51%. And then it starts normalizing over, the year to date. The 1 year is at 10.4%, 3 years average 6.9%, and then over 5 years, 6.1%. And then John, if you flip ahead to page 11, John talked about all the investment options, the plan assets in each of those investment options are conveyed on pages 11 and 12. We rank them generally in risk order, so you have the more conservative fixed income funds, and then going down into the international stock funds that I talked about. And then ticking down from 11 to 12 are those target date models, and then the specialty, the real estate, and then that Invesco Gold and Special Mineral Fund. And then if you flip ahead to page 13, John did a good job talking about the cash flow, but I did want to just highlight one thing. The middle part of page 13, we did see some heavy outflows, and you'll see the cash flow summary. Third line down is the cash flow positive or negative. September of last year, it was 2.3 million. December of last year, almost 5 million. 4.5 million March. And take a look at that. Even though it's negative for June 23, it's off only $500,000. So maybe that stem has turned. So nonetheless, positive news there because the trend is definitely improving, even though we did see net negative cash flow for the quarter. Flip ahead to page 15, just a bar graph of the plan growth over time. Certainly in 2022, the plan did decrease a little bit, but you'll see, for the most part, an increase over those 5 silos. And then on page 17 is the 401A plan, so the next section, you'll see a little bit higher return out of the 401 program. For the quarter, up 6.2%, year-to-date, up almost 13%. For the 1 year, 14%. 3 years, 7.5%, and then just under 7% for the 5 years.
I don't know if there's any relevance to this, but when I look at these cash flow summary numbers, we're very close to Sacramento, so we get a lot of people who have worked for the state and then come to the county. And PERS retirement date, in order to get their COLAs, is December. S.J. Sarah, San Joaquin County's retirement big date is March. So it might be interesting to know if it's fairly high in December and March every year, because that's an opportunity to reach out to potential retirees and say, you don't really need to take your money. I don't know, it popped out and hit me in the head. Just might be some piece of data that might be interesting to know if they're higher in December and March.
Yeah, timing could impact that dramatically.
Opportunity, because we saw it at S.J. Sarah. They're high in December and high in March. And so, just a thought.
Thank you. Moving into the 401 plan growth over time on page 22. True to form, significant run-up from 2019 to 2021, a little bit of a decrease in 22, and then getting back on its footing in 2023. Flip ahead to the next section, 24. This is that investment policy statement compliance page that I spend a few minutes on. We call this a manager scorecard. We take all the characteristics of the investment options and screen those against the metrics in your investment policy statement. If everything is comporting with those metrics, it's going to show that blue dot for passing. You'll notice the 2 funds that are on watch, that T. Rowe Price large cap growth and then MFS mid cap growth. You'll notice that there's no red dot under the quantitative, so it's no longer violating metrics. But take a look at that 5-year rank, which is the column kind of middle right, 49th percentile. The trigger is 51, so the fact that it's 49 is really, really close. And back to my point, the language in the investment policy statement says, even though it's no longer violating metrics, let's give a fund 2 consecutive quarters of compliance before we remove it. The MFS, if you recall, Paul Gordon, one of the co-portfolio managers, departed for retirement. In our regular conversations with MFS, the remaining 2 managers are fine. The portfolio and the philosophy and the process, all those are still intact, A+. And so despite the fact that it's showing that red dot, we'll probably give that another quarter and then remove that from watch status at that point. But all things are looking very positive with MFS, despite the fact that Paul abruptly left for his retirement. Flip ahead to page 26. The top, conveniently, is that nationwide fixed account. I want to talk about the performance of the fixed account because this was not only a topic of conversation at the last meeting, but it will be an agenda item here in a few minutes. It's about the return of that sole capital preservation fund compared to CDs or money market funds in the overall marketplace. If you take a look at that 1-year return, it's 2.52%, and therein lies the rub. Is we have this steady drumbeat from our other participants across the state. Why should I stay here when I can get a 4, 4.5, or 5% return elsewhere? So again, that's just a point of context that right now the 1-year number is 2.5%. The one other thing too is if you flip ahead to page 27, second blue line down is that T. Rowe Price. I talked about the strategy to invest in very, very large tech-heavy names. Take a look at the return. For the quarter, up almost 15%. For the just 6 months of this year, up almost 31%. and then for the 1 year up just under 27%. And the peer group rankings are also very, very solid. That's that gray line beneath it. These are percentiles, so those gray gray road numbers will always be from 1 to 100. 13th percentile is really good. 25th is not as good, but still very, very solid. And back to my point, over 5 years, it's 49th, just below the threshold. So real quick, taking a look at fees. The one thing that we do as your co-fiduciary is make sure that the fee structure is very, very reasonable. So if you take a look at 32, this is a good chart for the advisory committee and the plan administrator. Starting at 2018, fees were relatively high. Thanks to due diligence at the committee level, the fees have decreased, you can see over time. 2019, still relatively the same. And then as we moved into 2021 and 2022, fees have dropped rather dramatically. Keep in mind there's that 5.75%, 0.0575 or 5.75 basis point admin fee. Nationwide out of that collects 2.25 basis points. The committee or the plan collects the remainder 3.5% for plan-related expenses. Again, just taking a look at the fee structure is another fiduciary responsibility that we report to you. So questions there? Okay, that concludes my remarks on this report. Thank you very much.
All right, and next is also Vincent to talk about the addition of money market fund to the core menu, and it is listed with a possible action.
Right. So in addition to what John at Nationwide was presenting about adding some capital preservation solutions to the self-directed brokerage, this solution is a little bit different in that this would be actually on the core menu. A participant would see this on the investment menu across all the other investment options without having to set up a separate account. And so what we did is we did an analysis, and if you were to choose a money market fund, we have 3 suitable or appropriate options if you wanted to add one of these. If you flip ahead into the book on page 2, there's a description: the Fidelity Government Money Market Fund, the Invesco Premier U.S. Government Money Market Fund, and then the Vanguard Federal Money Market Fund. But before I talk about that, I want to talk about some of the pluses and minuses of adding a money market fund because it's not all positive. The pros we've talked about, certainly a higher crediting rate, and with the recent Federal Reserve moves, those rates are going to go up. If there's more interest rate hikes, those interest rates are going to continue to go up over the short term. Essentially, there's low management expenses, higher crediting rate. The discussion that we had, if you recall, was not so much the active employees or the active participants, it's more around the retirees who can vote with their feet. Back to our point that we've been talking about. If I'm earning 2.5, but I can get 8% in my bank, or 13%, or 4.5%, that's one of the key drivers of a lot of our participant behavior, is that performance. I can make money elsewhere, therefore I'm going to leave. So one of the pros is it may, to some degree, stop this flood of participants or retirees from leaving. But like I said, there are some disadvantages. There's that wash provision. If you were to add this fund, it would be deemed a competing fund. So a participant couldn't move money directly from the fixed account to the money market fund. They would have to park it for 90 days or more in a non-competing fund. So the administration could be clunky, and it could open up to participant risk if they're invested somewhere in the bond or stock market. The other bigger
Could I make a suggestion,
Yeah.
Vincent? I know that Charles Schwab, because I have that in my personal investing account, has a money market fund. It's SNSXX. And what about if you just added that as a component to the Schwab alternative as a money market, in addition to like an ETF, if we were going to do that, or CDs? And that rate on a 7-day rate is about 4.8 and change right now. and it floats, as you talked about, but that, I think, might be a intermediary to kind of avoid what you're talking about.
Sure. Do you know who offers that money market fund?
Schwab.
It's a Schwab
okay.
fund, yeah.
So that's a great suggestion. I can reach out to my Schwab contact. I don't know if we have the ability to suggest funds in the self-directed lineup. I know that Schwab makes whatever they make available, and we typically don't have any say in what they do make available. But I can ask I have a couple Schwab contacts that I know pretty well, and I can ask if that fund is available or can be made available, but I can't make any promise that I have to check with them.
And the nice part about that is it's a one-day turnaround, so if you need the money in or out, there's no penalty, there's no trading. I mean, it's super easy. I keep all my extras cash in multiple accounts in that, and so far it's been awesome.
Sure. Can you repeat the ticker, please?
SNSXX. Sierra November Sierra X-ray X-ray.
Okay.
And some record keepers count self-directed brokerage as a competing fund, even though it's not a low-rated, short-term bond fund. The Nationwide doesn't, correct?
No.
Okay, so that could be a solution. The other part of it too is going back to the disadvantage. And I think it's more philosophical / educational, because I know Brenda does a good job about saying, this is a marathon, not a sprint. This is a portfolio for decades for your retirement, and short-term noise is just that. Do not be reactionary. I think that it could potentially, and you could have a different opinion, but it could potentially create this chasing of yield over the short term, because essentially this is a very unique situation where rates have gone up rather dramatically, which has helped money market funds, but it's not going to last. That's my cloudy crystal ball guarantee. The other rub of it is the fixed account, back to my point about when interest rates go up, the value of existing bonds go down. The fixed account with the duration of 6 years, as interest rates have gone up over the last 18 months, the portfolio at the fixed account, which is built for full market cycles, has taken a dramatic hit. And so those rates on the money market fund are going to continue to remain high, whereas the rates on the fixed account could potentially go down or decrease. And so it's this perfect storm short term. But back to my point, participants, especially retirees, are easily focused on that yield, and I don't blame them. That's a very, very easily quantifiable return difference out of my portfolio, or quite frankly, my steady stream of income for my retirement. All I'm saying is it does potentially present this chasing the hot dot that Brenda does a really good job trying to avoid. So with that said, let's go into the performance report, or the performance of the funds on page 3. And this is where it gets pretty impressive short term. If you take a look at the short-term numbers of the Fidelity Government, the Invesco Premier, and the Vanguard Federal, you can see for the 1 year, it's 3.6, 3.8, and 3.8 respectively. But take a look at the 5 years. This is where it gets relatively anemic as you move away from this short, maybe once in a lifetime situation. The rates are a lot lower than what you get with the fixed account. And so that's why I want to just maintain that perspective. But take a look at the rates in 2021. When the overnight rate was 0%, that's exactly what participants were getting. To put it in context, because as I talk about the short-term returns versus the longer term, take a look at the upper half of page 4, the far right of that first bar. This is that current spot yield. So it's a little bit different than that 1 year return. 4.9%, 5%, 5.1%. Again, these numbers are going to go up with the most recent action by the Federal Reserve. So it's somewhat of a high-class problem for you to try and please the participants over the short term while maintaining that philosophy that this is that marathon and not a sprint. Okay, with that, I'll pause and see if anybody has other comments or questions.
So, I think it's kind of like what Jay just mentioned, and that's really thinking outside the box. I mean, basically, your proposal would require the funds to be rested, but Jay's proposal, if it is approved, would just be able to transfer without any restrictions, is that correct?
Correct, you can move money into
Correct.
Schwab anytime without any restrictions.
I'd like to see, again, I'd probably like to wait to see if you're able to do that. I don't see why your Schwab partner wouldn't say, sure, we have a fund for you and add it to it. Again, I don't see it as being an issue, but.
Yeah, Schwab will offer money market funds. I just don't know what their lineup looks like. They don't share that with us, but I actually already sent them, I have two contacts, so I sent them both an email already just a few minutes ago. And I'm waiting to hear back to see if they have SNSXX available to invest in. But I know that Schwab offers many. I just don't know what specific money market funds that they currently offer.
They're not gonna be significantly difference between across the board, so I would probably think we should table it and then see and wait until we hear back.
The only other consideration with Schwab is that there is an annual fee to be in it. So it does cost $50 a year to have an account. So participants might say, well, gosh, now I have to pay $50 to open it. So that's a consideration to
I
make.
guess we have to take a step back first to see philosophically if we wanna go there, and then discuss it, I guess.
I think it's a good idea to expand what we can do in the self-directed area at Schwab, the fact that we can't currently do CDs. People are moving it. So that alone is, one thing, possibly the ETFs. But if we don't meet again for 3 months, I mean, I realize this is long-term planning, but there's a lot, people will be, especially after this most recent hike, people are gonna look at that fixed number and go, wait a minute, I really have to do this. I can't wait any longer. I need to move money if I'm gonna get an access to at least the CDs.
Yeah, it sounds like there's a pretty big interest here that Brenda said that people definitely are interested in that.
Yeah, I have people waiting. I've been telling them we're in talks because they're telling me, I think I'm gonna walk out the door because it looks better at the bank.
Okay.
So I've been asking them to kind of hold off.
Again, I think we're not opening it up to equities that could be extremely risky. This is a minor step towards that direction, but again, I would say we go ahead and move forward and open that door for it. Again, if it was individual stocks, it would be a different conversation, but you're talking about bonds and fixed income products that aren't gonna, move the needle very much.
What if we opened it to CDs or potentially voted to open it to CDs this meeting and brought more information back on the ETFs and the other possible funds for the next meeting? I mean, just a thought.
Can we open it up and then maybe, depending on what comes back, we don't need to wait till the next meeting to approve it?
I'd be okay with that.
Keep in mind, just the ETFs are just like a regular mutual fund, which is what the county already allows. It's just a lower cost. The expense ratio is a little bit less is the only difference. The other thing to keep in mind is there's a minimum balance that somebody has to have with the nationwide account in order to utilize the Schwab, but most of our retirees have pretty high balances. So it's $12,500 in the 457, and then they need to keep a minimum of $10,000 in the 457 plan, but they can move the rest over to Schwab.
Someone like to frame that motion? If Jason was here, he'd put his Correct. Move forward with the addition of the money market fund to the core menu, and then also in regards to the ETF, we'd go back and see if Schwab would open that investment up, and if they do, we take his recommendation to see which one we want, and then we move forward and approve it.
Okay, you mentioned money market, I mentioned
Okay.
CDs.
Yeah, I'm sorry.
So I think there was questions still about what money market funds would be available. And there's still whether or not the ETF funds, I don't know as much as you do about the ETFs. So do we want to, I guess we have a motion on the table. I'm sorry. Anyone want?
So Ponce, was your motion to allow the addition of the CDs?
Correct.
Okay.
We'll add them
Wait
all in there.
to get more information on the ETF?
Correct.
My recommendation, so I would propose you operate within the confines of the agenda. So are you, your motion is to approve adding the money market fund and then coming back with more information on ETF CD at the next agendized meeting in October? No.
So my motion was to add the money market fund, instruct staff to evaluate, bring back a suitable investment, and then and we could just have staff approve it.
So are you saying let the plan administrator?
Yes.
So, do we have a second to that motion?
I second it.
All in favor?
Well, actually, could I get clarification first?
Absolutely.
So, and I thought we were talking about two different things, so I just want to be clear. Are you talking about the money market in the self-directed or on the core menu?
Yeah, core menu is on the agenda, then we're just
And
adding
then,
the.
and then of the three that we're providing, we have a recommendation of the three. Are you proposing one of the three?
I'll take your recommendation out of the
In the
three.
Vanguard Federal?
Okay,
Of the three, that's the most appropriate one.
okay.
Okay, thank you, sorry.
Thank you. All right, so we have a motion and a second. All in favor? Aye.
Aye.
Opposed? Motion carries. All right, so now we come,
Just a quick question. Who do you work with to update the Schwab forms in the meantime while Pam is out? Do I have a contact person?
you can work with me on that. Exactly. All right, next on the agenda is comments from the committee members. Any comments from any member?
This is Fonse. I know last time we met, we talked about having the hard copies. If, I don't need any hard copies, so if you guys are gonna print some out, just exclude me from that.
Any other comments?
I really do like getting the information as close to the meeting as you can. I know you're, giving the most current information as quickly as you can get, but I really like that emailed to me. So just to let you know, for some reason, the PowerPoint wouldn't go through. At least I got a whole lot of one page.
Okay.
It was just layered on each other. But other than that, I really do like the information before I get to the meeting. So thank you.
You're welcome. We'll work on making sure the next time it's a PDF version, so you're able to hopefully just move through it. Okay. And I just wanted to add that we will be, Ms. Babb mentioned that her term is going to be up this December, so there will be an election process and nominations that'll start in September. And the voting. So I think before our next meeting, we will have completed that process. The voting will have concluded, and then it would be confirmed by the Board of Supervisors in December. So just make sure.
So do I
everyone is-
show up for the next meeting?
Yes, ma'am.
Okay. Could I run again if I wanted?
I believe so.
Okay, I didn't know if there was like a restriction,
I don't think there's a
like running
term
for
limit here.
president,
Yeah.
only 2 terms. Okay.
I don't believe we have a term limit, but we'll definitely take a look and make sure we share that information with you. All right, our next meeting will be Thursday, October 26th at 10 a.m. here in the same location. And we'll adjourn the meeting. Thank you.
Okay.